Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Steve Saretksy. He's a Vancouver-based realtor. You can find him online at SteveSaretsky.com. Welcome back to the show, Steve. Hope you had a great Canada Day.
Yeah, likewise. Always a pleasure to be on here, so thanks for having me.
Steve, how were home sales for June?
It was kind of a continuation of the trend here we've seen through 2019. So across Greater Vancouver as a whole, across all property types, if you sort of lump them together, we had the fewest home sales for the month of June since the year 2000. So we had a 19-year low in home sales for the month of June. If you sort of start to break it down by each segment, the most weakness continues to be in the detached housing segment. With data going back to 1991, it was the fewest number of single-family house sales in Greater Vancouver. And then the condo market, weak, but not quite as weak. It was the fewest condo sales in Greater Vancouver since the year 2002. So, I think all in all, it's, kind of what we've been used to all of 2019, which is just abnormally weak sales, sort of rising inventory, downwards pressure on prices, and that sort of continued here in June. Interesting to note is I think it sort of bucks the trend. I think that a lot of people in the industry and I think a lot of some economists and stuff that I've been talking with, and there's a lot of at least optimism for the month of May. We had a May that was maybe seasonally a little bit busier, particularly because we had a really weak March and April. So there was sort of optimism that, hey, May looks like maybe there's some signs of a turnaround. So let's wait and see what happens here in June. And I think a lot of those aspirations kind of fell flat.
Are sales for the first half of the year projecting a trend for the second half of 2019?
Yeah, I tend to think so. I mean, typically, if you look at it, March, April, May, June are probably the busiest months from a seasonality standpoint in the housing market. So typically, once you get July and August, people go away on vacations. Realtors aren't working, clients aren't really looking for houses. You start to get, and then of course everybody knows November, December. When it's ugly out, people aren't out there looking for housing. So typically, if we had a really slow start to the beginning half of this year, I think that sort of has no doubt set the tone for what's to come here in the back half of 2019.
What are people telling you? Are they waiting to see when prices come down and stabilize at a certain point, then they're going to buy?
I think everybody is sort of pricing ahead of the market. So like buyers are pricing ahead, saying basically what's happening is you have buyers that want to pay next year's price and you have sellers that want last year's price. So that's this kind of impasse, right? I think most buyers right now are looking at it and saying, hey, if the market appears to still be going down, and I'm going to be basically taking quote unquote some of the risk for purchasing today, I better be getting, at least a pretty decent deal. And so they want to feel like they're negotiating, a fairly fair price. And, they want to be compensated for that, obviously. And, some people are taking that plunge, but obviously, given that we have a 19-year low in sales, certainly not enough to move the needle.
With that in mind, are people telling you that they're saving up for a down payment so they're ready to go when they feel the market has bottomed?
Yeah, I think so. I think the problem is, typically while everybody says, hey, I'm going to be on the sidelines, and waiting, and there's going to be all this cash that just floods the market as soon as prices start to fall or fall further. I just don't really, that's typically not how these things play out. A lot of it is psychological, right? I mean, people get nervous or scared in a down market when prices are falling, right? It's typically the big money that starts to move in and starts to provide a floor for prices. You also have a lot of too is typically if you have a big drop in house prices, it does have knock-on effects on the economy, and that will eventually, hasn't yet, but I think eventually, this has the potential to cause some volatility in employment, and I think people, unfortunately, there will be layoffs, particularly for construction sector and that sort of thing, and so even though people that might be saving for a rainy day for houses, unfortunately there are unforeseen circumstances that I think derail some of these people's plans. So that'll be something to watch for. But no doubt there are people that are well capitalized that are waiting for opportunity.
There is a very sizable Canadian citizenship contingent in Hong Kong, and they're having all kinds of political problems right now. Are you hearing that those people might sell in Hong Kong and come back to Vancouver? I've been in touch with at least some of my clients that live in Hong Kong and are frequently back here. And I think as of right now, there isn't really sort of any rush or exodus out of Hong Kong. I think that there's some of the higher net worth individuals that seem to be moving money, from what I hear anyways, is into Singapore. So I don't really think at this point there's nothing to say that, hey, all this money is flooding out of Hong Kong and it's all coming back into Vancouver real estate, and nor do I think that necessarily will happen. I think that, like anything, it's certainly a possibility if things, get out of hand. But, with the latest being that the extradition, policy has now been pulled out of legislation, at least for the foreseeable future here, I don't think that's an imminent risk that money flows out. We'll have more with Steve Saretksy right after the break.
Grand Portage Resources' Herbert Gold Project in southeast Alaska highlights increased gold resource, indicated and inferred, of 860,000 ounces, in excess of 10 grams per ton gold. Expansion drilling is planned on the Herbert Gold property for the summer of 2019. Grand Portage Resources trading symbols are GPG on the TSX Venture, GPTRF on the OTCQB, and GPB on Frankfurt. For more information, please visit our website, grandportage.com.
Cypress Development Corp. is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp. trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Welcome back. We're speaking with Steve Saretksy. Steve, is it becoming tougher and tougher to get a mortgage from the banks?
I don't know if I'd say it's honestly been that tough. I think that, it's definitely gotten stricter. It's definitely gotten more challenging. I think particularly more so on the construction side. So if you're a developer looking to build, it's certainly gotten a lot, stricter on that side. I think obviously the banks are perceiving risk involved in taking on some of the construction exposure. So I think from that aspect, I think from a typical person, I don't think financing has become overly burdensome. I think that, if you're a foreigner with no income to declare, that has certainly become more challenging. As well as getting, say, money out of China to help with a down payment. It's certainly got more difficult from that aspect. But, from your typical local perspective, I don't think it's necessarily tightened up that much. We've also seen a huge drop in interest rates. Obviously, the 5-year fix, I have clients getting, 5-year mortgages today at, as low as, 2.8%. So obviously that's down close to 100 basis points from our highs, about 6 or 7 months ago.
Are you seeing people who bought houses on spec being foreclosed?
Not really. I think the foreclosures that are happening right now are foreclosures where people have taken on private mortgages. So they have, a first or second mortgage from a private lender on a 1-year term. The equity is diminished in that property. And they're not able to necessarily sell the house because it's kind of in a liquid housing market. And so you're seeing the foreclosures that are happening are foreclosures, from people that took on private mortgages for whatever reason that may be. A lot of it, of course, is to speculate. No sort of widespread foreclosures, and certainly not really seeing any foreclosures from any big Canadian banks.
Traditionally, do Canadians do everything they can to make sure their property doesn't get foreclosed?
That seems to be the case. I think we've historically had very low delinquency rates in Canada, and so there's obviously been some adage that Canadians are, very diligent in paying their mortgage, and that Canadian banks are, very prudent, et cetera, et cetera. Historically that's been the case. Obviously, I don't think we've had too much stress in the Canadian housing market where that's maybe necessarily even put to the test, but, it'll be interesting to sort of see how things play out here.
Has the fear of missing out on a rising real estate market turned into the fear of losing more on the way down?
I can't really say that I've gathered that sentiment. I think that, again, buyers are certainly looking for deals and wanting to pay a lower price and certainly wanting to negotiate, but I haven't seen, sellers, quote unquote, capitulating and saying, oh my gosh, get me out. I'm definitely not seeing it. I think a lot of sellers are trying to hold as firm as they firm as they can. But we're still seeing lower prices, and as a result, that's why you have the 20-year low, 19-year low in sales. It's because those sellers are trying to hold out, right? So, I think that's kind of the sentiment in the market today is, hey, of course you do have some sellers that need to get out for whatever reason. Some of them might have been speculating, some of them might be, getting foreclosed on. Some of them might have been, hey, I built a house on spec and, I need to get rid of this place. There's certainly some of those sellers, but I think in general, for the most part, I can't say that's true.
Are people who, pre-bought condos trying to get out of the deals?
We're starting to see more of that. There's certainly more reports. I think that, I think that's probably more of a 2020 thing when you start to see more completions. That would be assuming, of course, the condo market sees continual price declines during that time. But I think as it stands right now, it's certainly a heightened risk in the market.
When it comes to mortgages, are people locking in or are they staying with variables?
It's kind of a mixed bag. I think I think we're seeing more people go fixed. I think the fixed have come down quite a bit again, where again, as I mentioned, 5-year fix, you get one for 2.8 today. So I think that for most people, that's pretty low. We haven't, that brings us back to sort of 2016 mortgage rates, which are historically very, very low. So I think for most people, when we had rates back up at 3.7, 3.6, 3.7, 3.8, I think more people were opting for the variable rate. But at this point, to me, it seems that there's a little bit more of a switch back to the fixed rate.
We'll have more with Steve Saretksy right after this.
Hi, I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp., RMO, on the TSX Venture Exchange. Rainy Mountain Royalty Corp. is a Canadian-based mineral exploration project generator. The company currently holds multiple property interests in Ontario with joint venture partners and is seeking further joint venture partners for other drill-ready properties in our portfolio. For more information, please visit our website at rmroyalty.com or call me at 604-922-2030.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Steve Saretksy. Steve, the Canadian dollar's been on the rise. Is that an added incentive for foreign owners of real estate in Vancouver to sell?
I don't think it's enough to move yet. I think the Canadian dollar is still, it's had a nice last 4 or 5 weeks, but I think it's still pretty weak in context. I know that anecdotally, some of the higher end sellers have looked at that and said, hey, well, I bought when the Canadian dollar was really strong, and that now it's not, so I just can't sell. So it's always something to factor into. Obviously, something sort of I'm keeping an eye on is you're looking at it and saying, okay, well, what potentially would maybe reinflate the market, or what would encourage an inflow of, say, foreign capital to come in and look at Vancouver real estate as, hey, maybe a good purchase is maybe, a depressed Canadian dollar, lower prices, weaker loonie. Maybe, if you're a guy in the U.S., you say, oh, okay, well, that sort of looks like a pretty good deal. That can hedge that just from the currency perspective. But obviously now we're starting to see some strengthening in the Canadian dollar. So, I think, that's kind of where we stand today.
Following the bursting of a real estate bubble, generally, how much does the low end of the market drop versus the middle and high ends?
It's not really easy to just put a simple figure on it and say, this is what the high end drops. But I think, historically what we've seen is the luxury market always drops more than the entry level market. So I think people that are maybe watching this and saying, they're looking at West Vancouver where, most of the damage has been done, where, prices are down to 40%. I think people are looking at it and saying, okay, well, hey, West Van down 40. That means this one bedroom condo is going to drop 40. Just give it time. I don't think that's necessarily the case. I think that, again, the declines stem from the high side. Certainly they do trickle down, but, not to the same extent. So, most of the weakness at the high end, that's just a much smaller buyer pool there.
Anything else, Steve, that we should be taking a look at right now?
Not particularly. I think that the next couple months here, as I mentioned, July and August, typically slower months. So I think that's going to be interesting to sort of keep an eye on, now that we're past the spring market. Going into 2019, everybody was saying, well, in order to see, how Vancouver real estate is going to shape up this year, we really need to wait and see till the spring market shapes up, and that will sort of dictate, how things move going forward. And, obviously, with June coming to a close, that pretty much rounds out your quote unquote spring market. And, I think most people would agree that given sales are at basically 20-year lows, I think it certainly disappointed a lot of expectations. Just to give a context as an example here, if you look at January through the end of June, so the first 6 months of the year, if you take that and compare that historically, we had, during the peak of the housing boom, we had, in 2016, we had just over 25,000 sales in Greater Vancouver. Through those first 6 months. And then here in 2019, we've had just over 10,000 sales, through the first 6 months. So, just to give context how drastically the market has changed, how, you could certainly argue it's kind of gone through that boom bust phase.
Steve, thank you so much for being on the show.
My pleasure, Jim. Thanks a lot.
My guest has been Steve Saretksy. He's a Vancouver-based realtor online at stevesaretksy.com. If you have any questions for Steve or any of our other guests, you can send them to info@housestreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter @Housestreet. I'm Jim Goddard. Thank you for listening.
Comments made on Housestreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. Housestreet.com radio is a production of House Street Media Incorporated.